Okay. Good afternoon, 12:01. My name is Scott Christensen. I'd like to extend a warm welcome to all of you who joined us today for Startup Pitching 101. This workshop is a part of our ongoing Startup Fundamentals workshop series offered by UM Ventures with collaboration from the Maryland Technology Enterprise Institute at the University of Maryland. To everyone that is attending the live session, please feel free to submit questions using the Q&A function, and you may submit your questions anonymously if you wish. These sessions will be recorded, and this session in particular will be recorded. You can see past recordings that we've done on the Startup UMD channel, which I am putting in the chat. In particular, today we are joined by Isabel Wen, the co-founder of, I already am forgetting how to say it, Aurelius.
Aurelius, thank you.
Aurelius. Isabel Wen is a former VC and startup operator turned executive coach for entrepreneurs navigating the complex journey from innovation to sustainable growth. That's it for my blurb. I'm going to pass it to Isabel.
Thanks, Scott. Really appreciate you hosting us for this today. And thanks everyone for making the time to join us during your lunch. And thanks to everyone who's watching the recording later. So I'm just going to jump straight into it. We've got a lot of ground to cover, and I also want to make space for you to ask questions at the end. I know you probably have a lot of questions. So yeah, today we're talking about startup pitching 101. I'm sure a lot of you know or have a sense of what that is, and some of you are curious. So today, the agenda, just to kind of give you a quick preview, we're doing the intro for a couple more minutes. I'm going to set up some polls as well. Then we're going to go into the meat of the presentation for about 35 minutes. And with the time left, about 15 or 20 minutes at the end, we'll do Q&A and some wrap up. So as Scott said, I'm co-founder of Aurelius. So we are a communications and strategy consulting firm working with early stage startups and small businesses as well as nonprofits. Basically, why my opinion matters today. I've reviewed hundreds of pitch decks at the early stages for tech startups. I was thinking recently it's close to 700 or 800 at this point. I'm not really sure. And recently I was added to the South by Southwest 2026 Pitch Advisory Board. So happy to chat about that. Um, the other thing that I bring is as a former startup operator and scientist, I also, kind of know what it's like to try to communicate highly technical things into a non-technical audience. And not only that, as a former VC and a grant maker, how to communicate it to an investor audience who usually doesn't have that same technical background, and also through that investor lens. So Scott, I don't know if we have any polls ready before we dive into today. Um, Wanted to
Yes.
ask a couple questions of the audience.
If you have your poll, I will launch your poll right now. Or can you
Oh,
do you remember the first question of your poll? 'Cause there's two.
I don't know if I set it up yet.
Okay.
These questions are about the end.
Okay. Apologies. Um,
That's okay.
yeah, I will. I mean, I can get
Well,
your.
yeah, just feel free to interrupt whenever it's ready.
Okay. Okay.
But I'll just get started. So the topics for today, again, what is a pitch? About pitch decks, a little bit about, what a good pitch deck looks like, what probably should not go for, also common success factors that I've seen, and common pitfalls in the pitching process. And then finally, we'll talk about how to get investors to actually read your deck and some final tips and takeaways. So what is a pitch? Uh, a pitch is, as you probably already know, something like this, where you have a deck either in front or behind you. You're talking to an audience. It could be a couple people, could be one person, could be a group, could be a whole audience. You could be on a stage, right? But it's also this, where you're pitching virtually over the computer. So hopefully you have a better setup than she does. You're not looking down, but that's become a lot more common with the online pitching since COVID. So you'll probably have to do that as well. But a pitch can also be just a conversation with somebody, whether, whether that's scheduled or not, or impromptu, right? Your elevator pitch, as we say a lot. And really at the heart of it is, what is the purpose of a pitch? What's the point? I think this is where a lot of people, at least for the first few times that they're pitching, kind of struggle with this. It's not trying to tell the other person everything possible about your business, right? It's it's kind of like your resume. You're just trying to give them enough information to start a conversation, and have them interested. So that's, kind of why it's called pitching, right? Like you're pitching, you're throwing, and they're catching, and then hopefully they're throwing it back, and then it's back and forth, right? So the purpose of a pitch is to get another meeting. That's it. You don't have to tell them everything in the pitch, and you're not going to. It's not reasonable. It's meant to be short and conversational. It can be anywhere from a minute to 10 minutes. That's really about it. So you want to get another meeting out of the pitch. That's how you know you did a good job. You also want to gauge interest. So you're looking for things like, are they asking questions? What kind of questions are they asking? And start to think about, why would they ask those questions? What are they curious about? Do they have concerns about what I'm saying? So that's another good use of the pitch. And then the other thing is investors are looking through their own filters. Uh, you may or may not be familiar, but they have what's called typically a thesis. So there are certain things that, but this is particularly in the case of venture capital investors from a VC fund, they have certain things that they can and can't invest in. So it could be geography, for example, in the case of Tedco, where I was working previously. It could be the stage of your company. They may only invest in pre-seed and seed, or they may only invest in Series A and after. The size of the check, right? So if you're raising 100,000 and the minimum check size they write is 1 million, it's not a good fit. There's also industry as another filter, as well as the type of business or sales that you're doing. This is where you'll hear B2B, B2C, B2G, and demographics can also be another filter. There's some investors, for example, that try to invest more in female founders. There's ones that try to invest in rural founders, and the list goes on. So if you can help them check off those filters faster, that, basically getting a quick no is a good thing. And then getting a quick yes is also great too. So what are the common elements of this, oh, the poll's ready. Yeah, let's do it. Before I dive in, I want to do some quick polls. So wanted to get an idea of who's in the room today. How many of you are startup founders versus VC or people that support them, supporting startup founders, or a future founder, or maybe something else. You're not sure, thinking about it, you're just curious. And for I guess everybody, how many times have you pitched before if you've never pitched? And for the founders, the last two questions, what stage is your startup currently? And are you actively fundraising or have you recently closed a round? So we'll give it maybe 15 seconds or so. These should be pretty easy questions for you to answer. I cannot see the results, so that'd be great if you could read them out. Or I think you can
Absolutely.
close the poll and it might show us all.
Okay. Let me. I don't want to end here. Let me end it. We've got 88% of people have submitted. I'm gonna give another 10 seconds for the last three remaining folks. Um, we've got good. We've got about 50% founders, 27% future founders, 9% entrepreneur support orgs, 14% other. The vast majority have not pitched very much. Um,
Great,
and then, or very early startups, more than 50% are actively fundraising. So,
great, awesome. Well, that's great that you're here today. You're doing the work, and hopefully you learned something. And if you have pitched before, hopefully you still learned something. And it's also great that you're here answering the polls. It means you're not just listening, you're actively engaged. So I love that. So let's dive right back into it. Thank you, Scott. So we've kind of come up with something like 12 common elements of a successful pitch deck. We didn't invent this. There's tons of resources you can Google online or, whatever your DuckDuckGo or preferred platform is. This is by no means an end all be all. This is just a starting point and a guide. So these are things that we've kind of seen as best practice. And that applies to everything that I'm saying today. It's not a science, it's more of an art. So first off, there's a story. Humans tend to receive information better as stories. It's a great way to start off your pitch deck. Oftentimes there's kind of like two stories, and I'm gonna try to um, I'm gonna try to speed through a little bit of this content because there's a lot more at the end as well. Um, there's either the persona, so that's kind of like a made up person or a real person experiencing the problem, kind of helping the audience understand what that means and what that looks like. And the other kind of story is the founder story. Why you started this, why you care. Maybe somebody you know experienced this problem, maybe you've experienced this problem. Maybe you have the technical expertise to solve it, maybe you don't. Um, Usually the founder story can be a really good tool. For example, if it's not immediately clear how you tie into the business and the startup. So for example, if like you have a theater background and you're doing a biotech startup, it's not really clear. So having a founder story would be really helpful in that case. So, oftentimes it's like, my grandmother had, cancer and it really affected our family, et cetera, et cetera. That would be a great use of a founder story. If you have a very clear connection, then, maybe you might want to go with the persona story, but it's really optional at that point. Problem. I hope I don't have to explain what a problem is, but in the slides, how painful is the problem? What is the pain point? How is it impacting people? The number of people, loss of productivity, for example, number of patients or deaths. Is this problem growing? Kind of giving a sense of the landscape there. And the solution, a lot of times where people go wrong, where founders go wrong, is that they start to list off features. You're not trying to list features, you're trying to list, again, going back to those problems. How are you solving each problem? And it's going to be unique for every business. The team, often underlooked or overlooked portion of the pitch deck. Why are you the right people to solve this problem? How am I as an investor going to know that you're going to see this through? Why do you care? Um, and this can include your complementary skill sets. If you're a solo founder, for example, like, do you have other people? Do you have advisors? How am I going to know that you know where to look for help? But if you have multiple founders or a core team already, how do your skill sets complement each other? Oftentimes with technical startups, sometimes the whole team can be four scientists or engineers, and that's okay if you have complementary skill sets as well and be able to explain that. And the other thing that's kind of unspoken more publicly and I think more privately with investors is, are you coachable? Meaning, are you willing and open to learn? And really the only way that you could show that is maybe by participating in programs like coming to things like this today, or going through an accelerator, going through I-Corps, things like that at the very early stages. Market opportunity. This is where I'm sure you've seen some slides, Tan San Som. Please Google that. I'm not, there's too much stuff to get through today, but essentially it's your market size. How much money can we make as a whole? Like, what is the whole opportunity? How much is that industry growing? What are the verticals there? Maybe you have multiple verticals that you're targeting, just to try to get a sense of how big is the pond, right? Or the lake that you're swimming in. Hopefully it's an ocean. Investors want to know the whole biggest possibility, right? Because if you're not able to scale your business and it's a very small opportunity, then it doesn't make sense for venture capital, and you should be pursuing other forms of funding. Competition, I'm sure you have a pretty good sense of that, but a little more detail. So what other solutions are being used today? This could be other products, this could be other services, this could also just be what other people are doing, whether or not it's something that's sold. How are these solutions different? What are their strengths and weaknesses? And then how does all of this compare with what you're doing, right? Where do you fit? And this also includes pricing, of course, but also ease of use and functionality and features, effectiveness, those kinds of things. The business model, how are you going to make money? How are you going to sell? Is it a product, a service? Is it one time, how many times are customers going to buy? Do they come back? Traction. So at the very early stages, this is things like we formed our LLC or C Corp if you're lucky. We've added some co-founders. We started filing for IP. We've got some wait lists. Maybe we have a prototype. We're going through accelerators, the programs. We did iCore. As you progress your company, it'll be more things like we have our first sales. We've built our MVP. We've got IP secured. We've got some funding. We've got partnerships. Go to market. Also often underlooked. How are you going to find your customers? How are you going to deliver to them? So this is things like we're going to go to conferences, trade shows. We're going to post on social media. We're going to buy email lists. We're going to cold call people, put advertisements. Maybe you have a personal network. So they're trying to understand more of your funnel, your sales funnel, right? So how many people do you actually need to get eyeballs on what you're doing and the conversion rate to actually sell? That's typical for your industry. So reasonable, like if you get 1,000 people to look at it or you talk to them, maybe 1% of them actually buy from you. That's kind of what we're looking for in the go-to-market, in the strategy, as well as your customer acquisition costs. Your roadmap. So what is your plan for the next few quarters and then annual for the next 1 to 5 years? This is, instead of traction, this is more like your major milestones that you're targeting. So for example, like being on the Apple Store, launching there, or raising Series A, launching in the market. If you're in the life sciences, having a regulatory strategy in place, and also your exit strategy. Do you want to stay with the business? Are you going to try to go for acquisition? And maybe roughly, are you thinking? Obviously, this is a wish list, not a you have to get it done, but just trying to get a good sense in alignment with the investor of what you're thinking. The financial projections, I promise the rest of the slides are more engaging than this. The financial projections, when are you going to start making money? How much are you spending right now? When are you going to be profitable? And also kind of some context for that, right? Like how many customers does that mean? How many units do you have to sell to get there? Just trying to get a sense of the growth of the business. And this is where you'll hear a lot of that people refer to as a hockey stick projection, because it's the shape of a hockey stick where it goes down and then it goes up, because they know you're going to lose money as you're trying to grow the business before sales. And then hopefully at some point there will be an inflection where you start to make more money than you're spending. And then finally, the ask and use of funds. So believe it or not, a lot of people forget to put that in their slides. So what are you raising for? Is this a pre-seed, a seed, a Series A? The main really important one is between pre-seed, seed, and Series A, because Series A is where you start to get into the price round. Feel free to ask that question later. I can just, we're going to focus more on the pitch deck itself here. But really that's just to give the investor alignment around the kind of instrument is what we say that you're using. So is that a safe note? Is that a convertible debt note? Or is it price? Meaning like, are you actually selling stock today, or is it a promise for stock later? And also, what is this money going to buy you in terms of runway? Like how many months more can you operate your business? And what milestones are you going to hopefully accomplish with this money? And so what the investors are trying to figure out for this information is, when am I going to make my money back? When might I have to write another check to you? Oftentimes, if you're doing well, investors going to write another check to you and they'll set that money aside. So this is helping them in their strategic decision making. And also, it would be helpful to put here or somewhere else in the slides if you have other investors lined up, whether or not they've written a check that are interested in this, but also include if you have previous checks written to you. That's a good place to put that. So the other side, in terms of format, there's two kind of basic formats. There's what I call a reading deck. So when an investor goes, "Oh, send me your deck," that's the reading deck. That's the one that you're emailing, where you're not gonna be able to stand in front of them or have a call with them. Like they're just gonna be flipping through it. Statistics show that investors spend at most 3 to 4 minutes looking at your reading deck before deciding whether or not to have another conversation with you. So you don't have a lot of time. And then the live deck. So this is when you're presenting in front of an audience. So for example, the deck I'm showing you today would be my live deck. But I will say my live deck is not a good example of a pitch deck because it's more educational rather than I'm not pitching to you. And that includes any audience size for your live deck. The other thing is you want to maybe keep it to 10 to 15 slides max. It's again not a hard and fast rule, but that's kind of what I've seen works well. Again, investors have very short attention span and looking at lots and lots of decks all the time. And it is possible to put all your info in that many slides. Again, it's just to get a conversation. So what I like to call it is a bullet. So you want to keep it short in the front, long in the back. So if you want to have more slides, put it in your appendix, but keep the core slides short, 10 to 15 slides. Sorry, 10 to 15 core slides. And then the format, PDF is honestly the best. But if you really, really want to send a link, please do not send a link that forces me to create an account on something. Either make it publicly accessible or use a private link with a password. DocSend is a good example of a platform that does that. Here's a couple examples of the reading and the live deck. So the reading deck, you can see there's a lot more text. You can't just like, in 3 seconds kind of get it. You really have to like stare a little bit and look, right? And then for the same company, here's the live deck. So, or live slide. So it's more visually focused, very, very simple, right? And some quick tips on live pitching. So I'm sure you've heard elevator pitch. This really shouldn't be any more than a minute, hopefully less than a minute. You'd be surprised how long a minute feels when you're talking. Obviously, you're not going to have a deck with you. And again, the goal there really is to have a conversation. You want to volley it. Keep it super simple. It's okay to not, have all the information again when you're pitching in an elevator pitch. It's going to make them interested and ask a question, right? And you're going to volley back and forth. You should also practice a 3-minute version of your pitch without a deck. That's a very common scenario. And some other common versions that you should have practiced is 3, 5, 7, and 10-minute pitches with the deck. Those are common formats for different kinds of pitch competitions or even like investors. So kind of a good rule of thumb. It's also preferred that the founder or co-founder or the CEO does the pitch. I have seen, other members on the team, almost always the executives or C-levels, but it is a little bit off or strange if it's not a C-level or the founder, especially at the early stage where you're not like, busy flying around the world or something. So that's just what I've noticed. Definitely try recording yourself and listening to the recording. You can learn a lot that way, much better than somebody telling you what you're doing wrong. And don't do what I'm doing, which is read the slides because we can tell. And also your energy is just totally different when you're reading the slides. And be prepared to answer questions. Just think about all those things I mentioned earlier, and even if you're not sure yet, that's fine. And also, if you don't know, it's okay to say, I don't know. That's actually a good sign rather than having you make up answers. But a good way to follow up with that, if an investor asks you, you say, I don't know, but let me find out and get back to you, right? So what I've seen that works well, you have a realistic opportunity to make a ton of money. So you have a large, TAM, SAM, SOM market size, but everything else seems to be logical and make sense. You're also pretty upfront about the risks to your business, so you kind of know what your weaknesses are. You've got some traction. Hopefully, you've started to sell, and that can include paid pilots or paid betas. The team seems like they know what they're doing. There's a saying in BC, we don't just bet on the horse, we bet on the jockey too. So are you going to be able to navigate, uncertainty and change, and find help? You've got a strong hook that's interesting. Again, your slides are simple. It's easy to find the information we need to answer the questions, and you have a good enough amount of info. You don't have to have everything in detail. That will come later, obviously, in the due diligence phase. And the mullet, keep it short, right? Short in the front, long in the back. And hopefully you have other investors soft circled or have given you previous investments. If you have investors that have given you previous investments and aren't already soft circled in your next raise, that is kind of a red flag because they're not willing to give you more money, which means there's something wrong. But hopefully you can get them interested and the dominoes will fall. Nobody wants to be the first check usually. Common pitfalls. So text, too much text, right? Too many colors going on, way too many slides, highly technical. Font sizes are all over the place, all the kinds of font styles. Just keep it simple. It doesn't need to be crazy. Unrealistic assumptions again. We're gonna make $1 billion in 2 years. Like, it's not impossible, but I'd like to see. There's no connection between the founder and the problem solution. So again, if it's not immediately clear from your background and expertise, and you didn't include that founder story, it's a little like unsettling. So just some uncertainty there, but it's not always a no. Again, the team doesn't seem capable, doesn't seem like anybody has relevant expertise in building this solution or experiencing this problem. There's too many holes. So like you don't have to have all of those 12 elements I showed you earlier, but if you're missing like 6 of them, it's like I shouldn't have to pull teeth from you for basic information about your business. It's like, again, think about the resume. It's like you should have your job experience and your skills and things like that. If it's not on there, I'm not going to spend the time figuring that out. But you don't have to have 100%. Also, something that has crept up in the past 2 years, slapping an AI label on everything. If you're going to put AI in text anywhere in your slides, you need to be ready to back that up and what exactly that means. But also be very honest about whether you're actually an AI company or an AI wrapper. And that's okay if you're either one. Not being prepared to answer questions, looking careless, typos, run-on sentences, just signals of poor communication. You need to be a good communicator if you're going to run a business. And then this is actually a fallacy. Your deck does not need to be pretty. It really, as long as you can convey the information succinctly and it's easy to find and everything seems to make sense, you don't need to spend thousands of dollars on your deck or tons and tons of time making it look perfect. So I don't know if you're already feeling ignored, but here is what I've seen works to actually get investors to read your deck. Get to the point, be brief, get to the good part quickly. If you have sold to customers and you're making money, I would probably put that towards the front of your deck, rather than having to read through the whole thing. That's one suggestion. Um, put yourself in the investor's shoes and think about how they are thinking. What questions would you want to know of yourself? Like if you were giving someone a huge amount of money, right? Like you also want to be cautious. But also think about how they might think, like what's their background? Are they a scientist? Are they not a scientist? And then, tune your tone and choice of words for that. Something that can be really disarming too is to tell them your risks up honestly as well and say, this is why you shouldn't invest in us. I've seen that only a couple of times. But not only what the issues are, but how you're going to address them. And that can be things like we have an advisor, or we're looking for an advisor, or we're going through this program, we're doing this research, things like that, right? So you don't have to have an answer, but you have to have a plan. And building trust. So getting a warm intro if you can. So, you know, and it doesn't have to be the strongest one, but if it's somebody you know and they know the investor, getting an introduction, because I know you get spam email, they get spam email, and a lot of it is pitching. So cold emails to investors don't always work because they get lots of them. But having that warm intro from somebody that they know and trust the email helps a lot. And if you don't, go out there, go to events, right? Hopefully you'll run into an investor and you can start to build a relationship. You don't have to be the best of friends, but just enough to be like, hey, I like talking to you. Tell me more. What do you do? Right? And then that's where you do your elevator pitch. And brand recognition. So in the deck itself, or you can also name drop sometimes, right? People that you think that they might know or trust. So logos are always helpful because they're also visual. You can get information quickly without having to read a whole lot, and it helps break up the text a bit. But so for example, sometimes if you work for a company that nobody's ever heard of and you put the logo in there and all your companies are like that with your experience, I mean, it looks good, but you might want to pair it with like why that's important. But if you do have, you know, name brand recognition logos like the university that you went to, or hopefully doesn't have to be, you know, maybe somebody on your team worked at a FANG company like a Google um, or something like that. That's always helpful. And so some final tips and takeaways. The hard part is actually not getting them to look at your deck because it's their job to, but it's getting a meeting. Oh, I missed my timing with that. It's the final slide. It's getting a meeting. And every pitch, the goal again is to get another meeting, right? Until you go into due diligence. And as a reminder, investors look at dozens, if not hundreds of decks in a month or a year. They've probably seen some variant of what you're doing. Uh, so, you know, on your competition, it's probably unlikely that there's nobody out there doing what you've done before. But you need to be able to grab the investor's attention, like why you're worth listening to, what's different about you, whether that's your experience, what you've accomplished, something unique that you've identified and are working towards. And if you don't have a warm relationship yet, again, you want to build signals of trust and proof of work. So that's those logos, those name brands, but also if they don't know those logos and name brands, those accomplishments, right? So it's kind of like your resume, why you should listen to me. Here's what I've done. But also on the business itself, here's what I've accomplished so far. This is what I've been working on. And even if it's as little as like going to I-Corps or which is actually not that little at all, but just showing that you're actually putting in the work and not just, I have an idea, let me pitch, right? Because every once in a while we run into those, and that's great. And we want to help you, and there's resources for that. But there's a lot of work you can do and should do before you're asking people to write checks to you. Um, don't focus too much on the technology itself. Yes, there's, you know, a little bit you got to talk about because it's a tech startup, I'm assuming. But more often than not, VCs are not highly technical backgrounds. The most exposure they've had is from working with startups and reviewing their pitch decks and looking at their businesses. So don't get too technical with how the technology works necessarily. Oftentimes they just kind of trust you that it works. And in the due diligence phase, they'll have an expert in that area, kind of give them a thumbs up, thumbs down of like, yeah, this is feasible, this is not feasible. What they really care about is this a business opportunity? Can we make a lot of money? Is it unique, right? Is it defensible? That's kind of what VCs are going after. And try to get feedback. If it's from the VC, which is super hard, usually they'll just say it's not a good fit or it's too early. Um, but ask your friends, like show your colleagues your deck if you're comfortable and see, can they understand it? Because if they can understand it, your VC can understand it. And then finally, you're going to have different versions of your deck. So early stage is probably fine to have, maybe the same deck you're kind of sharing around until you build out a library, but you're going to have different investors, different audiences, different backgrounds, different, contexts. You're going to have a 3-minute deck, a 5-minute deck, a 7-minute deck, and a 10-minute deck. You're going to have reading versions of those. You're going to have live versions of those, right? And then it's also going to constantly change as things progress with your business. Your pitch can always do better. Probably good to work on it, practice, but don't beat yourself up too hard about it. But just remember, it's the same as applying for a job, resumes and interviewing. You do want to practice. You want to know your stuff. You want to make sure it looks good because that's your first impression. And again, you don't need to spend thousands of dollars on your deck making it look pretty. The goal is just to get another meeting, right? And they know that you're at the early stages. So with that, uh, we'll do rest of the time Q&A, and then we'll do maybe a couple minutes at the very end just to do a quick wrap up. And so yeah, thanks. So let me look at the questions.
Yeah, I can read them for you if you'd like.
Yeah.
The first one was from Michael. How do we determine if we are seed or pre-seed, and how will our fundraising how will the fundraising differ seed versus pre-seed? To which Isabel, if you want to answer, you're more than welcome to. But I would also we have another webinar on the 20th that I would point you to that really goes into the details of like understanding the differences between different instruments and fundraising questions like that.
Yeah. So definitely attend that session because you're gonna need that is a hard question. But the short answer is it's kind of hand wavy between pre-seed and seed. Everybody's definition is a little different. The hard line is between seed and A, as I said. So Series A is where it becomes what's called price round, where you put a hard valuation on your business and you're buying stock. So the investor is actually buying, like walking away with stock in your business based on that pricing and valuation of your company. And they also get preferred stock and then et cetera, blah, blah, blah. But anyway, pre-seed and seed is before that, meaning generally the instrument or the kind of way that they give you money is for an agreement to convert or future equity. So it's more like a loan, kind of. And then at a future date, there's some activation that happens, and then they get equity. But generally, pre-seed and seed are more like that idea stage, beta stage. You may or may not have a prototype or MVP. You definitely want to have going into that fundraising a lot of like customer discovery. So something like on the order of at least 50 or 100 different conversations that you've had with different potential customers and stakeholders, really getting a sense of what are their problems? Does this solution actually solve them? Is there a business model to be made, like money to be made? Can we actually be profitable? Those kinds of things. And then also sketches of the technology itself, like it has to be functional. For the life science, it's different though. And so I'm happy to chat about that if that's relevant for anyone. But that's kind of the main gist. I hope that answers the question.
And if you have follow-up questions, feel free to put them in the chat, Michael. The next question was, does this apply to pitching a simple idea that you think has potential for partnership and investment?
You can try. I would say that is probably the hardest form of pitching right now, especially, I mean, it's always been, but especially the past 2 years. Um, the VC environment has been very difficult in terms of multiple factors. Basically, in a nutshell, there's not enough money going around. Then there are people asking for money, And it's always been that way, but especially so in the past 2 years. And part of that is the VCs themselves are also struggling to raise money. They also have to raise money from what are called LPs that invest into their funds. And so because there hasn't been as many exits in the past, I want to say 5 or 6 years, there's not as much liquidity. So their assets are tied in previous investments. Also, there's some investments have been drawing back because Silicon Valley Bank collapsed. So people are kind of a little bit more nervous since then. Also, obviously, as you're aware, everything happening in the economy right now is causing impacts in the VC world as well. Um, so you can certainly try to pitch an idea. I don't, I'm skeptical that you will get a check out of it, at least a sizable check. Really, at the idea stage, grants are more of a better one. But again, it depends on what you're pitching and the technology. So if it's like really cutting edge, right? Like you're pushing the boundaries of science, you're solving unmet medical needs, that's where you are more likely to get an investment for um, an idea stage pitch, but really, again, more likely a grant like a SBIR or STTR. If it's more like a software app, very unlikely to get investment at the idea stage, unless you have personal friends and family that are willing to just write you like 10, $20,000 checks. Um, in which case, I would be very delighted and surprised if people like that were in this webinar. They tend to have a lot more resources and support. Um, yeah.
Okay, and I'm also just gonna, if you have a simple idea that you want to kind of explore, we do have iCore at the University of Maryland that's available to entrepreneurs across the region. I just put that in the chat. But we
Yeah,
can
iCore
even
is fantastic. And also if if you're calling from somewhere else outside Maryland, there iCore is all across the nation. It's a federal program that's funded. It's free for participants. It's often the first program that organizations like the University of Maryland will refer you to at the idea stage. And they go through a lot of customer discovery and teaching you how to do customer discovery in that process to really validate your business idea to see, can you actually make money?
Yeah, and then I have one more question on the Q&A, and then we have two in the chat, two quick ones in the chat, and then we'll do Melissa. Well, see, Melissa, you have your hand raised. We'll get to you. James has a question. What are the ways you can find investors? Are there common areas to look in any best practices in this?
Um, I'm going to follow my own advice. I don't know if I have a great answer to this question. I'm not the expert in finding investors necessarily from the startup side. I would say there's a handful of places you can look. Um, Lowest hanging fruit, you can literally just Google like investors. You can look up you could use Gemini, ChatGPT, give you some suggestions. There's also a lot of people on LinkedIn who frequently post lists of active investors at different stages, which is kind of interesting to find. And the other thing to note as you're doing that, not every investor is going to be actively investing. So they may be an investor, they may have pages, they may be posting, but they may not be actively writing checks. And the reason for that is oftentimes they have a limited amount of funds and a lifetime for their fund. So usually it's something like the lifetime of the fund might be like 5, 10 years, and they might be investing in half a dozen or a dozen startups. So once they've written their checks, that's it. And they have to wait until the startups succeed or exit, or they have to raise another fund. So it's better to go for evergreen funds. So for example, TEDCO is a really great example of that. They get new funding every year into their different pre-seed, seed, and Series A funds. Um, there are also angel groups is another type of investor other than VC, which would be great for most of you at the very early stage. And there are individual angels. So this is just like people in the wild. They may or may not call themselves an angel. They may never say anything. They may just say they invest, or they may not say that at all because they don't want people to keep pitching at them. So it's kind of like looking for Pokemon in the wild. when you're going to networking events. But angel groups are a better way to find them intentionally and look for them. So people like that will typically join an angel group. And the advantage for them is that they're not having to do their own due diligence or legal or financial um, administration to write those checks. So it'll be a group of people like that with a coordinator at the angel fund sourcing the deals. And so there's several in the area. So for example, I think Citrine Angels is one, but they focus on women founders. Scott, I don't know if you know, do you have resources for other like local investors?
Yes, I'll continue to throw them in the chat, and I'll send the
Yeah.
Citrine Angels link.
And
But
the other resource I want to share is Be More Tech Connect. So baltimore.tech is the website. There's tons of resources in there, including organizations that can help you at these early stages figuring out the different parts of your business, as well as investors have profiles on there. Um, it's not a complete directory, but it's always being added to. And you can also add your startups on there as well.
awesome. The next question I have, I'm trying to go in chronological of who put them in first. Going from Melissa in the chat, she said, "Where I struggle are the pitches that are about 5 minutes. Do you have tips for where to focus for short pitches?" And then I don't know how much time you're anticipating. We're at 12:48, just FYI.
Oh yeah, no, we can take more questions. So,
Sure.
so let me make sure I got the question right. So she said she struggles at the 5 minute and needs tips for shorter
Short.
pitches.
Yes.
So is feel free to type in the chat. So like is your question you have a hard time condensing your pitch below 5 minutes? Which is what I assume is the question. Yeah, it's really hard.
Oh, cool. Yeah,
Um,
now I get to unmute myself. So hopefully you can hear me. It's,
yes.
these so like I'm very familiar of like the Guy Kawasaki pitch deck scheme and the 12
Yeah.
slides that you've talked about. But when you have, 3 minutes or even 5 minutes to pitch, that's a lot of material to cover in a short period of time. So do you really try to cover all of those slides, or do you focus more on certain areas? I guess is my
Yeah.
question.
Yeah. That's a awesome question. I think in most cases you do have to cut stuff out. It's just not possible to fit all of it. Um, and it really depends on your startup, your industry, what you're doing, what those things are going to be that you want to keep in, and as well as the stage that you're on. So I don't have a good catch-all answer, but for example, you might have to cut out go to market or something like the I think the meat or the bones that you're trying to get at is like again depending on the stage and the company and the fit, like maybe the team, the market opportunity and size, with the problem and solution, traction, and sometimes you can cut out the ask depending on the context. And you can also condense the slides where it's like, one or two pithy points from what would normally be a whole slide into, three slides into one slide kind of a deal. So you'd really just want to wow them and be like, these are the most relevant things that we've done, or these are the most exciting things that we think, you would want to hear, and why you should listen to us. So sometimes it's like if you have a lot of traction, like let's say in the life sciences, you've gotten some sort of fast track approval designation or something, which is a big deal. Uh, you probably don't need to talk too much about your team and your technical expertise in cases where you have a lot of traction, because the proof is in the pudding, right? But if you don't have a lot of traction yet, you probably want to talk a little bit more about your expertise. So I hope that answer helps.
Oh, awesome. How much more time do you want to take on questions?
We could do,
We've got really one more.
yeah, let's do it.
How to make the financial projections realistic on the slide deck.
Um, Again, I am not an expert at that, but I would say from my experience, when I've been reviewing pitch decks, I'm looking for big red flags. So if somebody's like, we're gonna make $100,000 in 5 years, and we have kind of a prototype today, and we want $100,000 today to help us do that. I would probably reject them as a VC because the scale of growth is not appropriate, as I said, for a VC investment. They're looking for much larger jumps. So realistically, like if you don't have regulatory hurdles, if you don't have a lot of crazy science to figure out yet, and it kind of works, but you're mostly focused on solidifying that market fit with the customers and getting iterative like feedback with the prototypes and things like that, and then also initial scales and growth. Realistically, you should be getting like hopefully in the millions in 5 years in revenue, if not more, like tens of millions. In some cases with AI companies, it could even be like 100 million or more. Again, depending on where you're at today. And then on the flip side, if somebody's like, oh, we're gonna make $1 billion in like 3 years, and all I have is this napkin sketch today, like that's the other thing that is not like for your type of product or service in your industry. So they're just looking for benchmarks. Like, are you kind of in that ballpark of what other people are saying? Is this realistic against like the current resources that you have, the current funding that you have, current revenue that you're making, the team that you have, the milestones that you've achieved? Does that line up logically with your financial projections? Does that answer your question? Does that help?
I don't know if they'll be
And
able
then
to get back quickly.
yeah, and then we can do if there's any other. I don't know if somebody raised their hand. I think there's time for maybe one or two more questions.
I think someone raised their hand, but then I asked the question that they had put in the.
Ah, got it.
So I did answer a couple of the Q questions just via text in the Q&A. I'm just pointing to some resources that can help you with some of the different questions that you guys are bringing up. Um, Isabel,
Yeah,
do you
and
want
then
to talk about like what your firm does and how you can help startups?
yeah, thank you. So yeah, so that's it for today. If there's no other questions, I'm also happy to stay till 1 o'clock. So again, I'm Isabel Wen, co-founder of Aurelius. We are a consulting and strategy, uh, communication strategy consulting firm for early stage startups, small businesses, and nonprofits. Um, we offer a variety of services, including pitch coaching and better related pitch decks as well, messaging and communication, helping refine your core messaging to investors or other audiences, especially technical ones, fundraising activities, as well as fractional chief of operations services. So, want to have good practice of follow us on LinkedIn, subscribe to our newsletter, which is on our website, b-aurelius.com. That QR code will take you to our LinkedIn. You can also email me if you have any questions or want to chat. I don't know if this is going on your YouTube channel. I assume it is, in which case I have to say smash that like and subscribe button, ding the bell, right? And then finally, we do have another session coming up with Aurelius on Wednesday, October 29th, also at 12 to 1 on Zoom. We're going to be talking about AI tools for startup communication. So that'll be exciting. That will be led by my partner, Jordan, who went to school for this. So that'll be fun. And want to say again, thank you. We'll be here for a few more minutes if you have any other questions. Scott, I don't know if there's anything else that you wanted to share.
No, just reminding everyone that this will be on our YouTube. I sent the YouTube link earlier at the beginning of the chat, and I will paste it in again. It usually takes us a little while to get it up there. Or sorry, that is not the YouTube link. Here's the YouTube link. I would highlight the rest of our, webinars. We do these, several, webinars a month. I put that in the chat as well. You can kind of get on that page. And of course, Isabel, her partner is doing another webinar on the 29th at 12 p.m. We also have another webinar next Monday for those that are interested in more of like the financial, conversations. How do you think about investment terms? How do you actually talk the language of investors, the specifics. So we have a free session on that. But other than that, I would just thank you, Isabel. And if people have any questions for the last 3 minutes, we can spend the time answering those.
Thanks so much for joining us today, everyone.
You please, I'm going to put your email in the chat so people can easily access that.
Yes, please. And if I don't respond quickly, it's because DC Startup Week is happening next week, so I will respond in November.
Sounds good. Well, assuming no other questions, I think we can go ahead and close the panel. Unless you,
Awesome.
yeah. Thank you so much for joining, Isabel.
Thank
Again, this
you.
will be up on YouTube, so I'm excited to. This might get a lot more likes. This might, really do some numbers on our page. So
Hope so.
cool. Well, thank you everyone so much. And yeah, we'll have more details, in an email. So sounds great.
Have a great weekend, everyone.